All right, I'm James Seyffart. I am an ETF research analyst, and I cover pretty much anything that does the overlap between DeFi, crypto, and TradFi, primarily in the asset management industry. Joining me is Giang. She's head of US equities and ETFs at NASDAQ, and Robbie Mitchnick, who's already been on stage. But if you don't know, he's managing director and head of digital assets at BlackRock. And though he'll dispute this title, he's colloquially known as the guy that orange-pilled Larry Fink. Larry Fink, the CEO of BlackRock. So, Robbie, let's just dive into what's going on in the markets right now. You guys have written some very strong pieces and you've said this publicly in interviews, you do not view Bitcoin as a risk asset. The market definitely does, based on the price action we've seen so far this year, particularly with the tailwind of positive headlines we've seen, particularly for Bitcoin and crypto more broadly. I guess, how do you view Bitcoin? What do you think it's going to take for the market to view it the same way that you and digital assets at BlackRock views it?
Yeah. Well, I think actually, James, a lot of Bitcoin investors view it as not this risk-on asset, as actually more like digital gold. But those investors trade a lot less than part of the community that is driving the price action that you've seen. I mean, it's one way to think about the Bitcoin market, right, is there's sort of two layers. There's a top layer that is less probably by assets, but they trade a lot, tend to be levered, quite speculative. They trade it up and down like tech equities, right? Then there's a bottom layer, which is actually much bigger, it trades a lot less. It's much more long-term fundamentals based, and I think overwhelmingly views it as digital gold. But on any given short-term basis, you can get predominance by that first group. Over the long term, I think we still believe in what it is, which is a global, scarce, decentralized asset that's not tied to any one country, political, economic, monetary system. There's a lot of appeal in that. And that asset doesn't care at all about tariffs. It's certainly not afraid of a recession. In fact, a recession is probably a big catalyst for Bitcoin. And of course, that's very counter to some of the short-term moves that you see. And for some, they may view that as irrational price action and actually see it as an opportunity.
So Saylor was just on stage, you called it digital gold. He was saying that he thinks Bitcoin should be worth as much, if not significantly more than gold, which would be a $20 trillion market cap. BlackRock has one of the largest gold ETFs in the world in IAU. Do you guys interact with them at all? Do you guys butt heads? The IBIT versus IAU conversation?
No, it's all one team. I think they're very happy for the success of IBIT. And there's a lot of, frankly, like-mindedness in investors who hold gold or hold IAU, and in investors who hold Bitcoin, hold IBIT. They both view the value of a alternative monetary asset that exists outside of existing systems, that is scarce and fixed supply, that's decentralized in nature. And they are fearful, in a lot of cases, of the kinds of risks that many of those long-term fundamental buy and hold Bitcoin investors are fearful of, which is, debt and deficit accumulation, money printing, inflation, currency debasement, geopolitical disorder, all things that are on the horizon and the minds of a lot of investors today. Not all investors have made the link between the two, and the narratives that are out there, to your initial question around risk on, is very confusing and unhelpful to them, because they get the digital gold story, but then they look and they see people calling it risk on, and they're for some reason worried about the purchasing manufacturing index and tariffs and job market slowdown, which of course has nothing to do with Bitcoin. And that just throws off the narrative and creates a lot of confusion, particularly for institutional investors who are looking at adopting it.
Great. Let's move on to more ETP specific questions. So Giang, a lot of people don't realize this. Everyone sees these filings that come out. People are trying to track what ETFs are going to launch. And a lot of people don't realize that it's the exchanges that technically file these rule change filings, and there's 19B4s. I have 40 of them that I'm tracking right now. Can you just talk about what you guys are seeing, what is coming down the pike for crypto-related ETPs as far as these rule change proposals, and what that process actually looks like?
Yeah, so I mean, for an ETF to come to market, issuers like BlackRock will file a registration statement with the SEC. For these spot commodity-based products, they typically file a Form S-1 registration statement with the Division of Corporate Finance with the SEC. And for spot products, the exchanges don't have generic listing rules that would just allow us to be able to list them without needing to go back to the SEC. So in hence, what you're talking about is we have to file these 19B4 rule filings with the SEC Division of Trading and Markets to amend our rules to allow us to list and trade these products. We had to do them for Bitcoin and Ethereum. It's been a year, a little over a year since the approval of the first spot Bitcoin ETFs, 19B4s, in January of 2024. We partnered with BlackRock on launching those products, and you really see how much the ETF wrapper has performed well with Bitcoin or Ethereum within the wrapper. And I think time and time again, the ETF shows how resilient it is, how it's able to add liquidity to the underlying asset class, how it's able to democratize it and provide it access to a lot more investors into the asset class. So we saw that to be the case with Bitcoin and Ether. And then now, we do have filings out there for the additional set of coins. So we do have filings. We're working with issuers on, what's next. There's filings for XRP, for Litecoin, HBAR, and so forth. So I think from our conversations with issuers, I think there's really three main initiatives that issuers are looking to really advocate with the SEC, and we're working on behalf of them to really move the buck forward. One is those additional set of coins, like what's next. And then the second piece is multi-coin assets as well. So being able to offer, multi-coin, like an index type of product. And then third is enhancing the existing product. So we have Bitcoin and Ether ETF approvals, like how can we make it more efficient? So offering in-kind creation redemption, offering staking, and even the options on these ETFs, how can we make the liquidity ecosystem around them even better? So we do have filings in place that are looking to increase position limits on IBIT options. We're also looking to be able to offer more flexible options contracts on IBIT options. So there's a lot of different initiatives to really help really make these investment vehicles even more attractive.
So let's stay on the topic. I want to get to some of the altcoin stuff in a minute, but Robbie, one of the things that's filed is to do in-kind creation redemptions. NASDAQ and BlackRock fought pretty hard in November and December of 2023 for the initial approvals to allow for in-kind creation redemption, which would mean in Bitcoin, you would, in a creation of shares of ETFs, you'd hand over the Bitcoin, in return you get the shares of the ETF, or vice versa. They made it go in cash instead of in kind. We're pretty optimistic that this SEC is going to approve these things for in kind. So I have two questions for you, Robbie. One, what is the benefit of in kind? And two, the number one question I get from people about this is a lot of people think, like me as a retail investor, if I have thousands of dollars or a couple $100,000 of a Bitcoin or Bitcoin ETF, I'll be able to change it. But will individuals be able to do it, or is it only for the institutions that can make markets and ETFs?
Sure. So we'll start with the first one. The benefits of in-kind, there are a couple. First, it's more efficient, right? And actually, the way we've gotten the cash trading model in these products has gotten to actually quite an efficient place. But in-kind gets you even to another level, which is, if you think about it today in very simple terms, when you have a creation order or redemption order from an AP on an ETF, there is a settlement of cash against ETF shares today, and there's a separate settlement of cash against Bitcoin today. And in an in-kind model, you cut out the cash elements of that, and so you collapse the trade down to a settlement of Bitcoin in exchange for shares. That's more efficient. It also should, over time, and some of this is regulatory dependent, make it cheaper for market makers and APs to create and redeem. And that ultimately redounds to the benefit of investors, because if the transaction costs to create and redeem in and out of the fund are lower, then ultimately it'll trade even tighter to the true net asset value, which it already trades quite tight today, but potentially even tighter over time. So the second part of the benefit is for investors who, and this gets to your second question, for investors who have relationships with the authorized participants who create and redeem shares in these funds, which is typically banks and large market making firms, then there's the ability to actually move Bitcoin in and take Bitcoin out without having to sell back and forth and buy back in cash. And so that is exciting to lots of investors who today would like to maybe diversify some of their existing large physical Bitcoin positions, holding some of it through the ETF wrapper. And so we're optimistic that that'll get done at some point, in the next little bit.
Great. Let's move on. The question I want to ask you is like what filing in the crypto space is coming next from BlackRock, but I know you're not going to answer that question. You guys haven't filed for an index ETF. You haven't filed for anything other than Bitcoin or Ethereum. So what I will ask is, what do you need to see from other projects, other coins, other layer ones or layer twos before you would consider offering or filing for an ETF that would hold those?
Yeah, so I think first and foremost, we're very focused on the client dynamic and understanding where real client demand exists for efficient turnkey access vehicles in the same way that it absolutely did for Bitcoin and also did for Ether. And so that's the number one guiding thing. When it comes to things that are maybe a little less straightforward than just these single ticker products, there's an element of getting comfort and building conviction in the idea that we can build something that's actually efficient and a great product for investors. Not just that investors might buy it, but to actually understand that this is solving a problem for them and is in a structure that benefits them. And that is not so easy to do for a lot of these things, and that's part of the ongoing sort of monitoring plus exploration evaluation process that we undertake.
Got it. Giang, can you just talk a little bit about the process that you guys are both involved in this process and going back and forth with the SEC. You both fought hard to allow for Bitcoin and Ethereum. I'm just here, a lot of people are curious to know like what's happening behind closed doors, and you're probably not going to give us everything.
Yeah.
A lot of people are curious to hear like how are things different from the prior administration to now, and just broadly speaking, what are those conversations like with the SEC? Has the tone, it's very obvious from anyone who's not in those meetings that the tone has shifted with all these lawsuits that have dropped, with the approvals that are happening left and right for different things. Can you just talk us through that relationship that you guys have and the conversations you have with the SEC? What are they questioning right now with these filings that you just spoke about?
Yeah, I mean, as an exchange, we have a really good working relationship with the commission, across various different administrations. I think, last year we were able to have milestone approvals for 19B4s, and we worked very closely between BlackRock, ourselves, other issuers, and the SEC to address a lot of those concerns, and how we got the initial products to market, and easing, with these filings, like the utmost concern for us is how to prevent fraud and manipulation. Like at the core for us, we care about transparency, integrity, and resiliency. So like every time we're working on a filing, like that's what we care about, that's what we advocate for, and those are the justifications we have when we bring these products to market. And so, I mean, with the crypto task force and the latest administration, we're engaging with them, a lot in terms of on our live filings and working through with them on, what are they evaluating when it comes to these next sets of filings. But also as a whole, like I think it's been really encouraging to see the commission engage the public, Commissioner Peirce has put out a series of questions and requests for information about how the commission should evaluate these next sets of ETFs, like knowing that the prior administrations have really thought a lot, looked to consider surveillance sharing agreements between the exchanges and the underlying spot market as a way to prevent fraud and manipulation. So they're looking at ways like what are other ways to prevent fraud and manipulation in the ETF wrapper, and like what are different characteristics of the underlying assets or the reference rate benchmark that really makes the price resilient and to manipulation that way. And so we're really encouraged by that level of engagement from the commission, and we're looking forward to developing that framework to evaluate all various different kinds of coins and having that clarity to the issuer and to the street of what's permissible in an ETF wrapper.
Sticking with this conversation, we just had CME futures on Solana list earlier this week. We had CME CFTC regulated futures also on Coinbase already before that. Today, I believe we had some Solana futures ETFs list on NASDAQ.
Yes.
Seems very fast to me, considering what we had to go through for the Bitcoin futures and the Ethereum futures ETFs. Can you just talk about that listing process and what's going on there?
Yeah, it's definitely an exciting day to be on this panel and have the next set of digital assets products be launched. So, as you said, there is two Solana ETFs launched today for 1x Solana futures as well as 2x Solana futures. And as you saw it with Bitcoin and Ether before, the futures-based products were able to get through the SEC review process much quicker. I think different than what I described before about the issuer needing to file registration statement of S1 with corporate finance, and then us needing to amend our rules to allow us to list for these future-based products actually fit the guidelines of the Investment Company Act of 1940. I know I'm going way into the weeds on all of these things, so just bear with me. But there's a lot of that already pre-work that has been done, and exchanges actually have generic listing standards that allows us that if the SEC green lights these products, we can list them very quickly. So the issuer for these Solana products, knowing that the future was being listed fairly imminently, they had filed for these products 2 months ago in anticipation of all this work to be done, and they've worked with the ecosystem and their trading partners to be able to support them, and then our listing rules were ready to support them going forward. So they've really been able to capitalize on a lot of the movement in terms of like what are the futures exchanges doing, and then working with the commission already in the background to be able to get their green light for their 40 Act-based product.
Yeah, these 40 Act products that hold futures, there's a whole bunch of those filed for XRP and other coins as well. Those could be potentially coming live in the next month or two on other exchanges, including NASDAQ. But the real demand tends to be in spot asset ETFs. These futures ETFs are more used as trading vehicles rather than the long-term buy and hold. But it's still very interesting to see because as we saw with Bitcoin and Ethereum, if you get a futures product, you're pretty likely to get a spot product at some point in the future. Robbie, let's go back to Bitcoin a bit. You made, not you specifically, but BlackRock made a bunch of headlines. Model portfolios, for those that don't know what that is, it's essentially like BlackRock has these free recipes that they'll hand out to advisors or anyone who wants to follow them for how to create a portfolio of a bunch of ETFs or assets, what have you. And there's literally trillions of dollars, or at least hundreds of billions, tracking these things. BlackRock is known as a model portfolio provider. A subset of their models added Bitcoin as a 1% to 2% allocation very recently. Can you talk about what those models are and what that conversation was like before you guys actually decided to add Bitcoin? Because it's kind of like it's very controversial in many circles. So I'm curious to see like what the discussion was about, like, do we want to add it? Don't we want to add it?
Yeah.
And the weighting, obviously.
So the particular model in question is called target allocation with alts. So it's one part of our models franchise. And in that model, there is a decent sized allocation to alts. And within that alt sleeve now, there's a 1% to 2% allocation to Bitcoin. That process is many years long, frankly, and reflects some of the fundamental analysis and thinking around risk return, portfolio impact, et cetera, that you've seen come out in other papers that we've published and also in commentaries that folks from BlackRock have done. And part of it is the potential for Bitcoin to serve a role as a unique diversifier because of its properties that we discussed off the top, and potentially a hedge against some of the left tail risks that exist in a portfolio. And I think it's a really interesting dynamic because this question of what it's going to be and how broadly it's going to be adopted by institutions and will it be in model portfolios. And James, I think that a lot of the crypto ecosystem does not grasp the significance of this point, which is if this is a low or even negative correlation asset, it will be a staple of portfolios of all kinds all over the world in an institutional wealth advisory standpoint. If it is, in fact, levered beta trades like NASDAQ, which some days it does, even though that sort of belies the fundamentals in our view, then it's just another technology investment for most of those people. You can invest in it if you like it, you can skip it if you don't, right? That's really the significance of this debate of whether it's risk on or it's not risk on and what the correlation is. And I think that flies under the radar for a lot of crypto native folks in terms of just how meaningful it is.
Yeah, there's been over its history, Bitcoin has been pretty uncorrelated, if not negatively correlated. But recently, it has been correlated to NASDAQ 100 tech stocks. You talked about institutional adoption. I've been on a few stages with you over the last year since you guys launched. What's going on with advisor adoption? I'm hearing a lot of rumors. Actually, they're not rumors. I know for a fact there are wealth platforms that are finally turning these things on. So there's two ways to basically, if you are running a wirehouse or a platform, it's either solicited or unsolicited. Basically, if you're the customer and you go to your advisor and you request to buy it, that could theoretically be approved. But most places had not yet got to the point where me as an advisor, I could recommend it in a portfolio. And that seems to be being turned on now, particularly with IBIT. Can you tell me like what those conversations are like? How often are you conversing with these teams that are deciding what can go on to these platforms? Where are we, like what inning are we in the term of advisor adoption?
Right. So I can tell you that one group that's not focused on short-term price movements is that audience in terms of the home offices that actually run these wealth advisory platforms. Those conversations started in January of 2024. And I would say that the pace of them is probably higher in the first quarter of 2025, despite a less compelling price trading pattern than it's been at any point since these ETFs launched. There are a couple big names that are known, Morgan Stanley amongst them. There are a number of others that are progressing quite well through their process. It's a long diligence, education, research process for them. Basically, every major firm is at some stage of that journey, but that takes a much longer term view, and I think the momentum there is quite good.
Yeah, you said negative price action. I feel like some of the people I talk to, like the fact that the price is back down is kind of like turned them on to like accelerate even more because they want to be able to allocate in a potential dip, is anecdotally from the people I'm speaking to.
It's funny because I had one institutional client conversation recently, and they bought a decent sized position, but they want it to be much larger. But this was back when it was 100K, and they said, well, but I wanted to have a 30% pullback, and then I'm gonna do it. And I don't know whether that's the right strategy or not, but it's interesting because it's very counter to what a lot of the investor base in crypto has been historically, which is the opposite, right? It goes up more, I buy more, it goes down, I flee for the exits, right? And that's really healthy for the long-term fundamentals of this market, that you have more investors who are in that opposite direction for many reasons, but including dampening volatility, right? If you have buyers when things move down instead of all one-directional trading.
Let's go to you, Giang. NASDAQ and other exchanges, they have made a lot of noise because specifically NASDAQ, you're publicly saying you're going to move to 24/5 trading, so 24 hours a day, 5 days a week. I mean, potentially, I assume you'll get to some point maybe 24/7. How much of that is driven by this industry and Bitcoin and other digital assets trading 24/7? How much of it is just normal course of where you guys were going anyway? And what's the driving factor? When is it going to happen? Anything you can share there?
Yeah, I mean, we definitely see that this is where the markets are moving to the 24-hour trade or continuous trading. There's a lot of demand globally for U.S. stocks, and people want to trade within their the hours that they're typically awake. And I think a lot of it is, like you said, because people are used to trading crypto 24/7. They're able to make place trades and have high conviction over the weekend and have a way to express their views of the market that way. So we're hearing it across the board from global broker dealers, clients who they're servicing, even within the U.S. Like there's a number of U.S. brokers that already are offering overnight trading because their customers are used to trading crypto in those hours. So as that, we saw that that's the trend. We want to ensure that NASDAQ supports that, given that we are a significant listing venue, a significant trading venue, that we want to support that trend. I mean, there's still a lot of operational things that needs to be worked out. I think a little bit different from crypto, from a corporate action standpoint, announcements, and so there's some consideration when it comes to equities that we were really being mindful of, and we were engaging the industry in resolving those.
Great. We're running out of time, but quickly, as somebody who works at a firm where, as I said, Bitcoin and crypto, it's like a lightning rod. People are like usually very in favor or very against. There's very few people that are like neutral in the middle. That's the same case at Bloomberg. I'm betting it's the same case at BlackRock. I mean, Larry Fink was on the complete opposite side of where he is now on Bitcoin. What is the conversations like internally with you at BlackRock? We'll start with Robbie, and then I also want to hear NASDAQ, because obviously this is, again, like I said, very controversial asset. What are those conversations like with people who are on the opposite side of the view as you?
Well, there's a ton of energy around it. I would say there's not a lot of folks who are, naysayers in the fundamental sense at this point. More of the debate is around just how does it fit in a portfolio, and what is the right sizing, what is the right way to think about risk, right? It's not about whether this is worth spending time on. I think everyone at the firm now has high conviction that it is.
Yeah, and Robbie wrote a paper not too long ago basically saying that on a risk-weighted based approach, it makes sense as something like a 2% allocation into a global portfolio, which kind of makes sense with the fact that the model portfolio that BlackRock has put in 1.5%. But were those related at all? Were those decisions related?
Well, there's lots of consultation and discussion across the various parts of the firm. So slightly different processes, but lots of integration of the way those conclusions ultimately get made.
Giang, how about you? NASDAQ has been very pro-tech, very pro-digital assets for the most part. What's it like at NASDAQ?
Yeah, I mean, like you said, we've always been very forward with innovative technology and really be able, and so crypto and digital assets is definitely not similar in that way. As Robbie said, across the company, we're very supportive of it and looks for ways to really drive innovation in the space. And we work with ETF issuers and engage regulators to really try to create that framework around how can we be greater partners to the ecosystem. I think from our concern, it's always about investor protection and transparency. So as we try to create that framework, that's what's on the back of our mind.
Last question, quick answer. I mean, today we saw a filing for Canary Pengu ETF. There's filings for Melania coin ETFs and Trump coin ETFs. Where do you guys draw the line, and where you'll go to bat with the SEC for an issuer? Is there a line that you guys are drawing in the sand?
Yeah, I mean, we're very focused on how do you create smart regulation and how do you promote innovation while being thoughtful about investor protection and the right disclosures that are out there. So we're working with the commission on that to get clarity, what's available, how do they see what's the security, what's not, and how does that fit within our listing framework?
Yeah, we should get those answers this year, hopefully, if not, definitely next year, from Congress or from the SEC and CFTC. All right, everyone, that's all we have time for. Thank you very much.
Thank you.